Bro, will you just go up? Okay, let's talk about Bitcoin. If you go on social media and you type in Bitcoin, it's a bit of a mess. There's gonna be a ton of people with 100K plus valuations, and there's gonna be a ton of people with sub 40K valuations. You're probably gonna be left in the middle, a little bit confused and a bit unsure about who to believe and what to expect. So I wanna kill two birds with one stone. I want to do some Bitcoin analysis, and at the same time, I want to show you my decision-making process on how I mark out key levels using supply and demand principles so that I know where I'm looking to trade and what I can expect to happen in the markets. This is pure price action, so you can do it on any time frame, on any market. So even if you're not trading Bitcoin, these lessons will apply to you whatever you're trading. I'm not going to do any gimmicky price valuations on where I think Bitcoin's going to go. I just want to focus on where I'm going to look to trade this week ahead, basically, because those 100K plus valuations, those 40K valuations, they're of no use to us at the moment because price is nowhere near it. What we want to look for is when we enter a trade, is price going to go in the direction that we hope for? I've been around on social media and crypto long enough to see that a lot of people will use smallest fluctuations in price to justify their extreme valuations. By focusing on intra-week levels using H4, H1, you can get more of an idea of what to expect in the medium to short term to help you make money, rather than focusing on those extremes that you will see, which is mostly just clickbait for YouTube thumbnails and all that kind of stuff. We don't want that here. We just want to know how to make money this week ahead. And then next week, we'll do the same. All right, so let's get into the charts. So we're going to start on the weekly time frame. As I said, I'm using the Bybit data feed because that's who I trade with. And if you want to trade with them, there's a ref link in the description below, which you can use to support me as well if you like. If not, no worries. So I'll go ahead and just mark the most obvious things. I always mark the most obvious things that shout out to me when I open the chart. And this is obviously the previous high. So what we've got here is a bit of a bull flag, which I wrote on my Twitter not too long ago, that hopefully in the months to come, we'll look back at this as the most obvious bull flag that we've ever seen. However, I don't really look at marking diagonals on my chart, but this is just for illustrative purposes. So we've got this high that has been engulfed, and then we have this wick basically above it. So let's mark that just for a little bit of context. And then what we will do is, based on my other videos, you can see we have a trend up, and then we have a retrace low here before the previous highs are made. So we have a bit of a range that has formed, which I'll just mark like this for now. So you can see that range now, but obviously we've been broken a few times down here. So there's not a huge amount of other information on this time frame which is useful for me on an intra-week basis, other than the fact that we have a big trend and we're sort of retracing. We're trying to get back up, but we're not going any lower at the moment. We have several wicks to the downside, this one being the biggest one, and we now have a higher high. So what has happened, if we're just reading the story of prices, we've had a big drop on this time frame. It's dropped down, spiked back up, made a high, come back down, and in the context of these two lows, it's made a higher low followed by a higher high. What we can do here is now expect some sort of trend continuation on the lower time frames. So now let's drop down to the daily, because now we have a bias for bullishness. And what we'll do on the other time frames is look for where we would expect bearishness to come in based on a key support level being broken. So down here on the daily time frame, we have a little bit more information. Let's just clean some of this up. So we have several lows that have been tested and taken, but other than the fact that we've seen bounces, it doesn't really make much difference to us at the moment. I'm not really looking at that. We have this high, which I said about before in the weekly time frame, which has been broken. And now what we have here is a support level. So a lot of buying took place here to push above this high, which is now formed part of a retrace. So for me, that's a key level to look to mark, because what we would expect on a retest of this level is a reaction, but obviously it's nuked straight through. And at the moment, what we could be seeing is a pattern like this, where we have price pushes up, and then fakes that level, a bit of sideways movement, only to head back up. This is kind of what I'm looking for, but we'll get into that in a moment. Elsewhere on the daily time frame, we have this key low, and this is basically the low that was formed before this high was broken. But we can also see here another high that was taken after this low was created. So essentially, this is an origin of buying that took place to break through resistance. If you're bearish at this point, because obviously, and again, I'm just looking at really I'm just looking at really obvious things that scream out to me. And it only has to be as simple as that. We have a big spike down here and price is pushed through it. This is the last sell-off that took place before this low was broken. So one would expect, if you're bearish at this point, for sellers to take control and push price lower, which actually happened here. We had a reaction to this supply zone, and then obviously price is now pushed up higher above that. And again, I've mentioned these on my previous videos about supply and demand principles. So this is a key level for me. And this is now a key level because it's a level that was formed that broke this key level. The key bit of information we have here is that sellers had enough power to break through previous support levels, but they couldn't follow through. And now that selling level has been broken by the buyers, which shows that the buyers are in control. Price is pushed up, broken other areas of sell-offs before retracing, and now looking back to pushing up. If we look at this level, we want to see, is this a high or has it been a reaction to something else? And again, using the same principle as this, where we look to the origin of a sell-off before a key support was broken, we have to the left this little cluster here. Okay, so this is where a big sell-off happened, and this was the last bullish candle before that sell-off, which took out this low. Okay, you should be able to see that. So price hits a high, drops down, buyers try to come into the market, but ultimately fail, and then we have a huge sell-off, which takes out the low. What one would expect is a retrace to that level, resting orders at this level, at this supply zone, push price back down. Again, covered in my supply and demand video on my channel. However, on a second time back to that level, those resting orders are gone and the buyers are able to push through and make a new high. That's a market structure change. So now let's just go back to a bit more price recency. So all of that has just basically given us a map for a bias about who's in control within this range and kind of what direction you want to be looking for trades in. Because if buyers are in control on this higher time frame, any sell-off that you look to be a part of, any bearish trend, if you've got in mind sub 40k because your favorite influencer on YouTube said so, suddenly when you might get into a move that does indeed break down, but when it comes to test support levels like this, you're thinking it's going to break through and push further down. However, the information in the chart is saying every push down has failed and then new highs have been made. So if you are short in this type of environment, you want to be short for the short term. You don't want to be short for very long. You want to be looking for the first trouble area to get out. Doesn't mean you can't profit when the bulls are in control, but it just means that you need to be a bit more wary of how long you spend in those trades. So now that that's a bit more information on the daily, let's jump to H4, which is the GOAT time frame. Personal joke. And here's my favorite time frame for trading Bitcoin at the moment in bull markets. If you follow any of my other stuff on my channel, you'll see that I like to trade intraday on forex on the lower time frames, on the M1 time frame and M5 time frame. When it comes to trading Bitcoin, I prefer to trade on H4. I like to have it in the background basically. So let's see what we've got here. We have a really nice demand zone and a bit of a range, and I did put this on my previous video, and I did take a trade here which got break even because it came back down and retested it when I thought it was just going to push further up. So this gives a little bit of context of what's going on here, but I'm just going to take that out because it is a little bit messy. But you can see actually the range that formed, pushed up, failed to continue, breaks back down into the range, pushes up, hits this range high, and then rejects. So now, again, on this time frame, we can see a bit more information. We have this high. Again, this is where the sell-off took place this is the origin of that sell-off that took place to break this support. And then on a retest of that level, we found some more sellers, but then price tested it again. The sell-off wasn't as strong and then pushes up. So this level is nice in the sense that a sell-off happened and then the buyers stepped in to take price above this resistance. So we can know that this is a key area. We can expect a good reaction from this point, and also nice little SR flip as well, but let's not complicate things too much. Now let's go a little bit more recent. What has happened is price formed this range. The buying took place to take us above that previous sell-off and create a new high, but obviously it is now in retrace mode. And I say it's in retrace mode because the trend is bullish and we've created a higher high. If it was to drop from here, as opposed to breaking and forming this high, I would say it's more likely to be a reaction from supply, and therefore a new trend forming is more likely rather than a retrace. So again, as I said, if you're bearish and you're taking shorts after a fake out, it's more likely that it's going to bounce from support and push back up, which is why you don't want to be holding those shorts for too long in a bullish trend. Now this range we can see is a reaction to this little cluster here. So price has pushed up, made this little cluster, also on the break of this little cluster. And I'm just marking the extremes of these levels, by the way, rather than the whole level, because we don't want huge boxes. And again, we can see this sell-off also broke some lows, which I'm not going to mark because I don't want too much on this chart. Now, on this most recent swing, because we have a map now, we have a bit more information about what's going on. And that information is telling me that bulls are more in control than bears at the moment. We can see here, if we look at this level as the key level, there is no real gap between this level and this consolidation. So all of these wicks are finding strength from this little range here. So if I mark that range as that high and that low, you'll see all these wicks inside it, as opposed to here where there's a bit more of a gap and you can see the separation between this level and this level. But again, those nuances for probably for another video. So this is the key level for me rather than this. What has broken this level? Well, the sell-off started here. So I'm marking that high there. Price broke down, some buyers stepped in, and then the sell-off happened from here to break this support. So this is a key level for me. And then what happened is after that break, it pushed back up, created a high, and then made lower lows, just about. So here we have another little supply zone, which has just been broken on this current time frame, but we've got about an hour or so left before the close of this candle, so there's plenty of time for it to wick down and then come back down. So we have to wait for that close, but I'm not worried about that just yet. However, what I will do is just to tidy this up, show where it's broken. Now, what we can see, again, using supply and demand principles, is that at this point, there was obviously a lot of selling that took place. On a retest of it, that selling wasn't as strong, so price couldn't push back down and follow through. Instead, what's happened is we kind of ranged, and now price is pushing back up. So that, again, suggests to me, similar to this level here, where the sell-off wasn't as strong as the previous one and buyers pushed us higher, we can expect price to push up. Now, price travels from supply to demand and from demand to supply. So we now have a big gap between this supply zone and this supply zone. If this is now to close nicely above this level and create a higher high above this little high here as well, it's safe to assume that price is going to travel up to this level at around $64,000. Now, what we want to also do is mark this demand zone, because we can confirm that as a demand zone. Whether it's going to follow through or not, we're not sure yet because it hasn't closed. But what we've got is a rally in price, consolidation, and then a further rally. But again, we have to wait for a bit more information at the moment, but that is a key support level. This current candle, the buying has taken place from this low here to push above the high. We're gonna have to jump down to some lower time frames to get a little bit more information on that. But for me now on H4, the two key levels for me about what to expect next are this level here at 61,000 and this level here at 64,000. We would expect potentially a bit more consolidation and push up to 64K. Otherwise, if price comes down, this is a great area to potentially look for buys. If it comes down, breaks this level, buyers step in but can't push it any higher, such as a lower high, we might be able to look to short, similar to this, okay? So we have, just for a bit of context, a support level gets broken, buyers step in, but they can't push up price any higher, and then comes back down. Similarly, we could have that break of support, buyers step in, but not able to push up, a lower high, and then come down. That's my scenario for a short on the break of this level. Otherwise, what I'm expecting potentially is a bit of ranging and a push up to this level at 64K. It may not even do that. It may just rip all the way up here, in which case, again, I would look for a break and I would look for some support to form. And then on a higher high, we can look to continue that trend. And that's how I'd look to play along on this scenario. Similar to how this has broken this high, consolidated, and is now putting in a higher high. But as I said earlier, it's all about patience. We want to see more price action form and give us a bit more information before we make these decisions. At the moment, these are kind of signals of intent, which is what I'm looking at. If we just jump down to my final time frame on H1, we can try and look for a little bit more context. And we can see here basically price is pushed above that high, found some support, tested that high again, found some more support on the previous support level, made a higher high in the context of here. So what's happened is prices sold off, buyers have tried to step in, sold off again, but couldn't get past the support. And then we have a higher high above this sell-off, a higher low, a stab up above it, and then a couple of closes into that wick, and we can see price is now pushing up quite nicely. This is some key information on this time frame to give us a directional bias for the week ahead, potentially, that we can look for buys. Now, this level on H4 was really clean. We can see that there's a little bit more information here that this actually is a reaction to this previous sell-off. So on a retest of this level, it's likely that there isn't going to be as big a sell-off or as big a reaction as last time. So what we could expect is price just to break through that basically, or as I said before, push up, consolidate, and then push up higher, which is what I'd be looking for. We also have, again, we can refine this a little bit on these lower time frames. We have the origin of that sell-off here. So what has happened is price has sold off, broken the level, retested this range, and that entire range, getting sloppy, I should mark that whole thing. Tested the bottom of the range, made a lower low, made a lower high on another test of it, and then dropped down. It suggests to me that this level is getting a little bit knackered for the sellers. So I would be looking bullish for the week ahead, essentially. Would I be looking for 100K? No. What I'd be looking for is just to take price to the previous high at first, and then make some decisions based on what happens next from there. So again, I'll be looking to execute on H4, but at this point in time, I don't know why you'd be looking at 100K. I don't know why you'd be talking about 40K. We're in the middle of a massive range that's been formed for months. We don't want to get too carried away. I've been guilty of being too carried away on previous trades, and that's fine. But what we've got here is a couple of targets. So this is the origin of the sell-off, which broke all of this support, which we can see. So price made a high here, drops, breaks this support, pushes up, sell-off happens, and this is the origin of that sell-off which broke this support. So this would be my first target, and then my second target would be this high here at 69K. So really these are the levels that I'm interested in mostly. Okay, we don't have to talk about much lower than that, and then we can just clean things up a little bit. We don't need this, for example. And then if price were to, you know, wick, come down, and we do get a short, I'd only be looking to take that as far as here, because again, as I said, this is a key level based on the information that buyers came in here and then pushed us up above previous resistance. To me, this is looking pretty bullish though. So I'd be looking for longs for the week ahead. I hope you've enjoyed this content. If you've got any questions, leave them in the comments below. Hit me up on Twitter. Otherwise, have a great trading week, and I hope this has helped in some way. Oh yeah, and don't forget to subscribe.